Hey there, it's Trisha, and I wanted to go over the trades for Friday the 6th. I did not trade on Friday, but I thought I would show you where things set up just to help you guys get better recognition of the entries. The first setup that occurred was at 9:38, and I'm thinking that I probably would not have taken that trade, just because I like to wait till 9:40 because first thing in the morning, things can go either way. But I just wanted to point it out. You have price going down, indicator going sideways. We have our scalp indicator firing off. Our trend indicator is above 20. This is the bar that's setting up. We are above both moving averages, but it has not closed yet. And I don't really know what the tick count was at the time that this occurred at 9:38, but realistically, I can honestly say that if I was trading on Friday, I would have waited for that bar to close before I'd ever take an entry. Just because of the time of day, you really don't know what's going to happen. Could easily go the other way. So I would have opted probably not to take that trade. The next trade that set up was at 10:34. You have price going higher, indicator going sideways. Our trend indicator is above 20, so you can take that short. This is the bar that it's setting up on. You're below both moving averages and you're below the close from the previous day, so nothing really there stopping you from taking the trade. You just want to be aware of where the low from the previous day is, right below you. So for me, there would have been enough room to take that, and that would be up to you. I like to see at least 6 to 8 points in between where I'm getting in and having a reference point like that below me. So that would have worked. This one is setting up, what time is that? 10:47, and I want to say I would pass on that because this is the bar that it's setting up on right here, and you can see that you are even closer to the close from the previous day than you were on the entry that we just took. So even though you have price going higher, indicator going lower, totally up to you how you want to take that. You have to decide what is, enough, really enough of a void for you to take that trade. So, for me, like I said, I'd like to see 6 to 8 points between where I'm getting in and where there might be a reference below me where I'm going to get held up or a bounce. So, again, totally up to you how you want to take that trade. Would have worked out okay. The next trade that set up was at, was at 12:22. You have price going sideways, price going higher, indicator going sideways, scalp indicator firing off at 12:22. I would pass on that because our trend indicator is not above 20. We are below 20, so I would pass on that. We do have, this is the bar that it's setting up on, and then also we do have that low from the previous day there. So again, all those things considered, I would pass on the trade. Now obviously looking back, you can see that it sliced right through the low from the previous day, but obviously when this is setting up, you don't know that is going to happen at that time. So the safer way to take it would be, let it break and then take the pullback when it sets up on our smaller tick chart. So that's how I would take it. I would not have taken that trade. Would have worked out just fine. Next trade that set up was at 114, and that actually was, where was that? Right here on this bar. So you're below both moving averages. You could take that. We have price going sideways and indicator going down. So by sideways, what I mean is here we have a resistance area. I drew the trend line there. So we come down, then we bounce back up to that exact same area, and then we continue down. All the while, our trend indicator is going down. It tried to bounce when the price bounced, but it failed to get up to where it previously came from. So that is divergence. It failed to do what the price did. And continued down, so that would be okay to take. So you got your scalp indicator setting up, and definitely could have taken that. You are above the 20 on our trend indicator, so okay to take that. The next trade that set up was at 242, and this is one that you would have passed on because we're not above the 20, so on our trend indicator, so I would pass on that. Even though we have price going sideways, indicator going down, scalp setting up, we're okay on our longer tick chart. But I did want to point this out because this is an area of resistance where I drew the trend line, and you know we come price comes down, then we actually pull back up into that same resistance area and then continue down. All the while our our indicator is going down. Unfortunately, our trend indicator was not above 20, so that would be something that you want to pass on, or at least that I want to pass on. So again, these are things that I look for when I'm taking a trade, and I did want to just point those out to hopefully give you a better understanding what's going through my mind. You don't have to do exactly what I do. You adjust the plan and entries and stops and so forth according to what you like and how you like to trade. But just put it in writing and stick to it. Don't make your rules up as you go along. You cannot be successful if you do that, because if you do, then you'll find that you can't repeat good results. Because if you do find something that's working, you won't know how you got there because you didn't write it down, so you don't really know what different things were taking place because you didn't write it down. So I'm not saying that you can't break your rules every now and then. Obviously we all try not to, but sometimes we do bend the rules just slightly, and that's okay. Can't